Hey, I'm Stephen Chow, and in today's video, I'm going to go over creating a financial plan. I believe all of us have many goals in our life that we want to accomplish. And in order for us to achieve them, we're going to have a plan. So why not do this for our finances? In fact, I think it's critical that we do have a financial plan. From our most famous founding father, Benjamin Franklin, if you fail to plan, you are planning to fail. So let's get started on creating a financial plan, and hopefully we can begin collecting our favorite man, Benjamin. There are 4 things that we're going to do in order to create our financial plan. Number 1, we're going to identify our goal. Number 2, we're going to define and calculate our goal. Number 3, we need to know where we are at. And number 4, we need to determine our cash flow. The first step is identifying our goal. This can either be a life goal or a financial goal. But funny enough, in order to achieve a lot of life goals, you may find that you may need to achieve your financial goals first. The reason why we are identifying our goal first is because
this is the way.
This is the way. This is the way.
No, this is the why. Why are we creating a financial plan? What is the purpose and motivation behind it? Without our purpose, it may be easy to get sidetracked and not stick to the plan that we create. Most likely, you will have multiple financial goals you would like to accomplish. But for this video, let's keep it simple. I've always wanted to go to Thailand, so let's use that as our example. Now what do we do? This is where we need to begin doing some work. It's not good enough that we just know what our goal is. Now we need to be a bit more specific. What are we trying to do in Thailand? Thailand's a pretty big country. Are we gonna stay there for 1 day, 1 week, 1 month? All of those things have different costs. And so we need to specify and define what are the requirements for our goal. And that will allow us to figure out how to achieve it. Once we do that, then we can actually calculate the costs. This really applies to all the goals that we have. Really, it's not good enough to just know what the goal is. We need to do a little work and actually understand how do we get there. So let's begin doing some work. After a brief moment of researching, you can see that I put my notes here on this Google Sheet. I'm planning to go to Thailand around January 2023 for 2 weeks. Specifically in Thailand, I'm going to visit Bangkok, Chiang Mai, and Koh Samui, and then have the return trip back from Bangkok to San Francisco. Looking at Google Flights, you can see these costs that I put into here. For each day that I am in Thailand, it looks like the average budget is $30 for food, $35 for hotels, and $15 for taxi. And I got a sum total of $2,450, but I always put a buffer of 15% in case I go over budget. So in reality, I'm planning to save $2,800 total. Now, the next step is we need to know where we are at. And to do that, all I gotta do is check my bank account. It looks like I'm good. I have $5,500 in my bank account, and I only owe $145 on my credit card. Lesson is done. See ya. Just kidding. No. This is where we need to know where we truly are at. Oftentimes, we may look at our bank account and think that as long as we have that money there, we are good. But to be honest, I have many more credit cards than just the one that you saw. To know where we truly are at, we're going to have to get an overview of all of our different financial accounts. So this includes anything from additional savings or checkings account, to credit cards, to loans, to even investment accounts. And when you have that whole check, you essentially have something called your net worth, which is the sum total of your assets and your liabilities. And it's important to know what your net worth is. And to help us do this, I'm going to use a personal finance tool called Mint. All you need to do is go to mint.com and create a free account, and then begin linking all of your different accounts. So let me show you what that will look like here on Mint. Here I've linked my Wells Fargo bank account alongside all of my other credit cards. As you saw, I had $5,500 in my bank account, but I actually have over $7,000 in credit card debt. What I have is a net worth of negative $1,900. This is an issue because I have to pay these credit card bills, but I want to go to Thailand. Now that we know where we are at, this is where we can actually come up with our financial plan and move on to our next step. The final step that needs to be done is determining our cash flow. Where does the money that we earn each month go towards? You can see that although I have the $5,500 in my bank account and I could easily pay for the $2,800 trip that I budgeted, I have other expenses that I need to pay for, like the credit card debt of over $7,000. But beyond just that credit card debt, there's also the expenses of my monthly rent, the food that I have to eat. So this is where we are going to look at a budget sheet and map out where does all of our cash flow. And I think when we do this, you will find out that you can use this as the basis of your financial plan and have something to stick to, ensuring you reach your various goals. To help us figure out our cash flow and where all the money that we earn is going, I've created this simple budget sheet that you can access in the description box below. If you need to make a copy, you can go to the top left and make a copy here or download it in Excel, and then you should be able to use it. But to cover this spreadsheet, I basically have 4 different columns: income, investment savings, cash savings, and expenses. And the way that we use this spreadsheet is we monitor this monthly cash remaining number. So what happens is every time we input either an expense, a savings, or an investment, this is a sign that we are setting aside that money each month for those different purposes. And a good way to show this is, let's say that we have no money right now that we're earning, but let's start off with rent. Our rent is $800 a month. I put in $800 here. You'll see on the total, I have a $800 expense, and then you'll see that it subtracts minus $800 from our monthly pay over here. So let's say that we earn $3,000 a month. You'll see that this automatically calculates and we can have this take-home pay of $3,000. And now we have a monthly cash remaining of $2,200 because it's taken away from this $800 rent cost. So all we really need to do is fill out the sheet to the best of our ability. And let me go ahead and do that right now. So I have this filled out more completely now. I am upping the income to $3,200, which is representative of someone earning $20 an hour and working full time. And one thing to pay attention to is taxes. Don't forget to pay your taxes. Just because you earn $20 an hour doesn't mean you take home that $20 an hour. I put in a minus $600 here, which gives us a take-home pay of $2,600. Putting in my expenses, savings, and investments, I have $100 towards investments to a Roth IRA. Everyone should have a Roth IRA if you can contribute to it. Just gonna put in $100 a month. Cash savings so far, I'm setting aside $150 a month as an emergency fund. For my expenses, I'm spending $1,421 a month on expenses. That leaves us with a monthly cash remaining of $929. So what are we gonna do with that money? Well, we can do whatever we want with it. If you wanted to, you can buy more expenses, like say splurge on food. Instead of spending $250 a month, you can spend $750 a month. So that's $500 that is gone. But knowing what we're trying to do here is building a financial plan for a better future. Remember, we want to try to stack those Benjamins. Going back to our original purpose, we want to save for Thailand. And Thailand's going to cost us $2,800. We want to go there in January. So January from May is around 7 months, meaning we would need to save each month $2,800, divide that by 7, $400 a month. So luckily, we do have over $900 in terms of monthly cash remaining. So if we put in this $400, we just know that we can easily save $400 a month. And the rest we could technically use to pay down our credit card bill. So $529, that goes towards our credit card bill. And it's literally as simple as that. We just need to know where our cash is flowing. Now, that was an easy example. We were lucky enough, we earned enough income to have the money to save up for Thailand, as well as cover our expenses and pay down our credit card. But let's do a different scenario where we earn less money. Let's say that we earn $2,500 a month and we actually only take home $2,000. You can see that I have all of our expenses, savings, and investments in cash the exact same. I just removed the credit card payment, but I put in the Thailand vacation to $400. Now you'll see that this is red and we're actually at negative $71, meaning that we've gone over budget from what we earned each month. And when you go over budget and are in the red, that's how you end up accruing more debt. So something has to give in terms of us being able to afford our Thailand trip. Because I really want to go to Thailand and I'm $71 short, perhaps I no longer go to the gym. I cancel my gym membership, I cancel my Spotify, I cancel my Netflix, and you'll see that I have less debt. I'm only over budget by $15, but still, I need to budget more appropriately. Perhaps I need to eat less food or buy cheaper food. So I'm gonna drop my budget down to $200. Now I have a monthly cash remaining of $35, but I have credit card debt that I need to pay. I don't wanna accrue interest on it. I want to try to at least pay the minimum, $200, so I don't get charged late fees. Now I'm back down at a negative monthly cash remaining. So perhaps I need to budget more. I need to no longer save towards my investments, and I need to drive less. So $50 here, or I need to save less in my savings account. Either way, you'll see that this is a living and breathing budget sheet that you can use for your particular situation. And over time, as you hit your milestones, like when this credit card debt is gone and you no longer have to worry about it, then you'll have more cash that you end up saving. And not only that, you shouldn't think that your income is just going to stay at the same level. If you continue to improve and develop yourself, you'll have opportunities to increase your income. Perhaps you get a promotion or a raise, or you jump to a new job. Then your income goes higher to $3,500. And here you have more money to use. And over time, your financial situation will change, but the way that you plan for finances doesn't necessarily change that much. And in fact, you can use what I've taught you here today as your framework for how you can plan your finances. And the more that you practice this, the more that you'll figure out your own system that works best for your situation. Now that we've gone through all the steps, we really need to put it together and just write it out. It could be on paper, on your phone, or in a text document like here. This way we can look back at the plan we created and know what actions we need to take. What's important now is that we keep ourselves accountable and try our best to execute the plan. You can see that creating a financial plan isn't too difficult, but it does require a bit of work and organization. I'm hoping that the steps that I showed you today help you out in creating your future financial plans. If you liked today's video, please give it a thumbs up and comment down below. But even better, if you need help in creating a financial plan similar to the one that I showed today, or would like to know more about personal finance or learn about cryptocurrencies, you can schedule time to chat with me on my website, joltspark.com. Thank you, and I'll see you on the next one.